Now starting. All attendees are in listen-only mode.
So, good afternoon everyone, and welcome to our webinar, which will focus on temporary workplace relief. The webinar will be presented to you today by Sarah Robert and Charlotte Firth, and we both work for UTN UK. So this webinar comes to you from UTN, or United Tax Network. So before we start, we'd like to just explain a bit about the UTN network. This is a network specifically for global mobility and expatriate tax issues. There are contacts in 110 countries, and each country specialises in international tax, helping companies moving their employees around the world. The core services UTN offers can be found on the website, and we'll run through these quickly now. Assignment services, we can help with arrival departure briefings, cost projections, etc. Tax and social security planning, equity rewards advice, particularly cross-border, tax compliance, so tax returns, PAYE reporting, and payroll operation, as well as payroll consulting. So today's topic is temporary workplace relief. Note that this is not a specific expat relief and can be used in a UK domestic context as well as international. However, we often advise on this within global mobility. It's an important tax relief to consider, and the amounts involved can be significant. So I'll now hand over to Charlotte to explain what a temporary workplace is.
HMRC define a temporary workplace as a place the employee attends in the performance of their duties in order to perform a task of limited duration or for another temporary purpose. And this can cover assignments to the UK or within the UK. A workplace will not be considered a temporary workplace if the employee attends for a period of continuous work lasting more than 24 months. Continuous work over which is a period over which the duties of employment are performed to a significant extent at that workplace. And HMRC considers duties to be performed to a significant extent if the employee spends 40% or more of their working time at that place. A temporary workplace can also exist if an employee attends a place of work for less than 40% of their working time, and it's not a place they would normally attend in the course of their duties. And in that case, the arrangement can continue for an unlimited time. So no single factor is decisive in establishing whether a second location is a permanent workplace. And that will depend on the particular working pattern for that individual. If, for example, someone regularly spends 40% of their time at a second location, it is unlikely that HMRC will consider, given the frequency of the visits, that each visit can be considered to be performing a task of limited duration or for a temporary purpose. In those circumstances, HMRC would normally presume that the second location is also a permanent workplace. A temporary workplace can also become a permanent workplace in some circumstances, and that would be if either the employee has worked at that location for a continuous period of 24 months, or if it becomes apparent that the absence from the original workplace is going to exceed 24 months. In that case, travel costs up to the point of the change will be deductible, and costs after that point would not be. So that means that if at some point during the assignment it becomes clear that the assignment is going to be extended beyond the 24-month period from the start date, then the relief needs to stop at the date the extension was agreed and doesn't go beyond that point.
So what can be claimed? Temporary workplace relief is a relief under travel and subsistence. So we have some examples on the slide of what can be claimed. For travel costs, home to office travel is usually considered as private commuting and taxable if the costs are paid by the employer. However, if the travel is to a temporary workplace, then the relevant expenses can come under the temporary workplace relief. For subsistence costs, these would typically include hotel or rental, utilities such as electricity and gas bills, and council tax.
So moving on to what items cannot be claimed under the relief. Some expenses are not able to be claimed under temporary workplace relief, and that would be expenses such as broadband, unless it's for business use, telephone costs, or laundry costs. You should also look at costs for housing housing for family members. And you should note that only housing costs attributable to the employee themselves fall within the relief, and that means that family member costs should be excluded. As a general rule, you would take a 10% deduction for a spouse and 5% per child in order to calculate the cost that is allowable for the relief. Also, there is another point regarding location of the housing costs that you're claiming for. If the employee, for example, chooses to live at a place for their own convenience rather than somewhere that's near the workplace, then you would need to consider the amount that can actually be claimed for relief. For example, you could have an employee that chooses to live on the coast because their place of work is not near the coast and they have an interest in sailing. So in that case, you would need to see if the cost of living at that different location exceeds the costs that would have been incurred to live near the workplace. Then a reasonable amount can be claimed as a deduction, and the excess would not be deductible.
So the method of relief will really depend on how the expenses have been paid. If the employer pays the expenses, for example, they sign a lease agreement for the assignee to live in the property and pay monthly rent and all utilities, these expenses are reported on the individual's P11D and then shown on the tax return by the individual with a corresponding deduction under temporary workplace relief. So this would net off to zero unless there was a non-deductible element such as family-related expenses. If the employer pays the expenses but, for example, caps the amount that they're going to pay, then the same reporting will be done by the employer, the P11D route, and the employee could make an additional claim for the expenses incurred personally as well via the tax return. If the employee paid all the expenses himself or herself, then the claim on the tax return for temporary workplace would show all these expenses as deductible with no P11D items. We often see employers paying a round sum allowance to cover these types of expenses, as this is an easier way of dealing with costs from an administrative point of view. So the employer will pay the employee £10,000 to cover these types of costs, and as this is a round sum allowance which is not directly related to actual expenses, then it should go through the payroll as it's a cash item and be subject to pay-as-you-earn in the normal way. The employee should then retain all details of actual expenses incurred, so the lease agreement and utility bills, and can then claim a deduction via the tax return for temporary workplace relief.
So what proof is required in order to claim the relief? In terms of documentation, all documentation needs to be consistent with an anticipated assignment of no more than 24 months, and that should include work permit applications. For a visa length of more than 24 months wouldn't in itself be problematic, but you need to make sure that the assignment contract states a maximum of 24 months and that all other correspondence, including emails, indicate the same assignment length. We usually recommend that rental agreements are not signed for more than 24 months as well. Another important point is that to be eligible for temporary workplace relief, a relationship should still exist between the employee and their home country location if that's outside the UK. And so we would recommend they remain on their home country employment contract. In some circumstances, it is possible for relief to be available when an employee is put onto a local UK contract. But in that case, the continuing relationship with the home country should still remain and should be clearly demonstrated in order to be eligible for the relief. And in terms of expenses for the relief that you're claiming, you should make sure the invoices are kept, as well as bank statements, receipts, and any rental contracts relating to the expenses.
So, any questions? I can see that we have one question, which is how this temporary workplace relief interacts with relocation costs and relocation expenses. So Charlotte, I don't know if you want to just say a word about that?
Yep, so this is it's separate, and so UK legislation also allows for an exemption for the first £8,000 of qualifying relocation expenses. They would be listed on HMRC's websites and include removal costs and things like that for an employee starting a new job. So that could be claimed in addition to the temporary workplace relief. Is there anything else to say on that?
No, I think that's fine. So if you do think of anything else, if you have any questions following this webinar, please feel free to contact myself, Sarah, Robert, or Charlotte, and we'd be happy to help.